obviously, like I said, set it and forget it, because if you're at 5.875 and you have a 5 handle on your rate,
Yeah.
if rates drop to 5.5 or 5%, it's like not going to make that much of a difference. And
Nope.
I think the time frame we've seen to get from 5.875 or to like even 5.5 to 5 is going to be a pretty long time period.
Alrighty, folks. Fed Day was yesterday. Again, we got the whole no cut, no raise, do nothing stance from the Fed, which wasn't a surprise to anybody in my audience. But what might be interesting is the press conference. I think Powell repeated himself several times on several topics, but I thought we would dig into it from the boys from Convoy. First, what do you think? What did you take from yesterday's press conference?
Yeah, I think using the word repetitive or however many times he alluded to the fact that he's waiting for a signal either from the weakening labor market, right? We know that, or inflation, which he's basically saying that we're not going to touch rates. I think it's clear that the market over the last 4 months thought there would be 5, 4, 3.5. Now it's we said this going into 2025. We wouldn't be shocked if there was no rate cuts, and I think that's a real possibility now because it's always entertaining. We had it 4.5 years ago, but we got it front and center stage right now. The battle between Trump and Powell. Of course, the what I don't know if it's called a tweet now, but whatever it's called when you post on X or Twitter. But Trump's comments about Powell and his belief of inflation not being a thing and pricing and eggs way down and all that was just something fun that we're so used to now to price where mortgage rates are going to be.
Yeah, we've normalized the president of the United States calling the Fed chair a fool. Mr. Late, I think, is his new nickname. Again, Jonathan, I don't know. What did you take away from the press conference yesterday? Any notables for you?
I mean, it's the same thing we've talked about for a while now. I think that Powell is not backing down, right? I think that's the signal he's really putting out there, and people are really hoping. And I still have clients talk to me saying, Trump's going to kick Powell out. So I'm going to wait until Powell's out. He's going to take control, make it a central bank, and rates are going to come down. And I said, I don't think, everyone really fully understands what that entails, right? What that means. And it's funny you said the comment, or Dustin brought up the comment about, no cuts and whatnot, because with the beginning of the year when we were talking, you said, hey, your big prediction was like rates wouldn't break below 6, I think you said, right? Or something like that. And I think we're still like we're in that range, right? It did that once for a very brief, short period of time. And I think you went public and said, I was wrong, but you might not be through the end of the year, right?
Yeah. It's really interesting. I mean, the one call I've gotten right so far, and I called this in October of last year, was 2025 no cuts. I thought the Fed cut 100 basis points too early, likely politically motivated. And we were going to get no cuts in 25. And you guys are both right. At the beginning of the year, they were calling for 6, then 5, then 4, then 3.5. Now I think the odds are 2.5. But Jerome Powell said repeatedly yesterday, there are multiple scenarios where we will get 0 cuts in 2025. So again, I think that's interesting. Also, I think it's very clear that President Trump now understands he can't fire Powell. Now, when I say can't, I don't mean he can't. But what I do mean is he can't without destroying the bond market. And Trump sees destroying the bond market as a much bigger risk. The bond market would rip higher immediately. And obviously Trump, Bessent, really the American economy can't handle the 10-year, the 2-year, all screaming higher because of loss of faith. So, yes, we don't need to argue if President Trump could ask for his resignation or any of that stuff. The fact is the bond market is in charge and won't let that happen. So that's what I mean by he can't do that. Well, let's talk about the other news of the day. There was an announcement that the UK and the US have signed a all-encompassing tariff deal. It is the first one, which is always the hardest. Something I learned long ago in sales. Every year, the first deal is the hardest. So Is this a sign of more goodness to come? Is this a sign that tariffs are working? Guys, any thoughts on this first signing?
Yeah, I mean, this happened an hour ago when I got the notification, right?
Yep.
I think it's a very big, step in the right direction, because it's no secret the last 2 months have been essentially kind of focused around where this tariff situation would head, and markets want certainty. The last 2 months have been uncertainty. Now this would hopefully start a domino that would lead towards more certainty on where these deals are going to be made with other countries, right? And it's a very, if not, I would say the biggest driver of rates right now until that gets solidified.
Yeah. Jonathan, any thoughts on this?
No, I think Dustin kind of hit everything in terms of what we
Yeah.
would discuss. Yeah.
Yeah. So again, this just did happen about 90 minutes ago. I've actually gotten some alerts because I've been recording since it came out. It sounds like this may not be the all-encompassing tariffs deal we were led to believe. It may have some time frames and this and that in it. Again, I will know more tomorrow when we record content, but I do think it's always important to get the first one, and hopefully we get more to come. But I also hope it's a fully baked cake and a real deal, and not some kind of mishmash of a headline just to block the noise. That would be disappointing. Again, I don't have any details yet, but let's just hope it's the real deal and not some cake you took out of the oven too early just to get a headline. So we'll move on from there. We have seen rates generally soften over the last couple of weeks, although I did just check the 10-year note 2 minutes ago, and it's going the wrong way. So watch out for that. But it sounds like you guys have successfully got it back, the 5.8 program. Why don't you remind us what that is, why it's good, and what's going on there?
Yeah, so it's DSCR, right? 5.875 is the rate. It's a 30-year fixed. And obviously before, up until a month ago, we had it available and it was getting filled really quickly. And then the market shot up. So everything, the floor had moved up to like 6 or 6.125. Now we're back to 5.875 is the floor. And we've been filling that pool very, very actively. Especially and this again is for the client that wants to set it and forget it and not worry about what's going to happen to the market in the long run, right? And a lot of clients have been calling us and asking about the 5.875 and if it's real. And I'm like, yes, it's real, right? We just locked someone yesterday. So if they happen to watch this video, comment down below to make sure to show people that it's real. But the clients that are asking for it obviously requires a buy down, right? Wherever the LTV percentage is, it's up to 70% loan to value is the max. So it went up from 60 to 70. Right. Nice. And now you can bring it down to 5.875 if you want to. And then it's DSCR debt coverage at like 100%. So no like under 100% coverage. But obviously, like I said, set it and forget it, because if you're at 5.875 and you have a 5 handle on your rate, if rates drop to 5.5 or 5%, it's like not going to make that much of a difference. And I think the time frame we've seen to get from 5.875 or to like even 5.5 to 5 is going to be a pretty long time period. And the reason I say that is because a lot of clients are like, I want my mortgage rate to be at 5, or I'm not going to do anything for investment properties. I tell them if investment rates are in the 5s, that means primary, and in primary residences, conventional is like 3 or 4, right? So right now, if we're 6, all of a sudden get into 3 or 4 range, and then they're like, oh shoot, that's a pretty far drop. And
that's not happening.
Yeah, exactly. So it's just something that we want to remind clients too. Like the market itself is not like it's not like a wait and see time right now. It's
dude, you're underselling it. A 5.875, set it and forget it, 30-year fixed rate loan, even with a buy down, is a perfect loan for my community. Right. A lot of people don't want to, have to, they're not betting on the whole marry the house, date the rate nonsense. I keep screaming that that's a stupid idea, and thankfully was proven right. But I just want to confirm, this is obviously for purchases, but is it also for refis or just purchases?
Purchases, rate and term refinances, and cash outs. So everything up to 70% of the value. Minimum loan amount, not valuation, is $150,000.
Okay. So this
Yeah.
is not your cheap Ohio homes. This is
Yeah.
minimum loan amount of one. So loan amount of 150 at 75. What's that put that at? Or 70 puts it at like 250 ish. Yeah. 250.
12 ish.
Yeah.
Yeah.
212. Okay. Somewhere around there.
But
Yeah.
I mean, it's again, it's a great tool for those people. If you're in the $100,000 range, though, like loan amount wise, 100 to 150, like we have options, but the rate itself is not that much of a driver in terms of the monthly payment difference. So I just want to take a little bit of power away from the rates in that
Yeah.
sense, because you don't want to focus too much on the rate side and get screwed on what you're actually supposed to focus on, which is cash flow. On
Yes.
that
Agreed.
aspect.
Agreed. Yeah. Well, the other thing that you guys just announced, and I really love the fact that Convoy Home Loans is always looking for opportunities to kind of fix holes in the market. Back when I was flipping homes and keeping a couple, I was always annoyed by the seasoning rules. Sometimes the seasoning rules were 6 months. Lately, they're more like 90 days on some products. But it sounds like you guys just released or have access to a product with 0 seasoning. So tell us what seasoning is and just talk about the game-changing opportunity that you have available.
Yeah, so
Yeah,
seasoning
so
is time on title, but Dustin can explain the product.
yeah, you want seasoning is exactly what John just said. It's basically in a simple analogy. If a real estate investor buys a home today and he wants to refi after he's done all the repairs, there's usually what's called a seasoning requirement where he would have to wait or she would have to wait, let's say 90 days until they could refinance and use the new appraised value as the value and get cash out. Okay.
Correct.
So what we've had, and this goes in hand with what John was just talking about, like the 5.8 product that came back, if we rewind 2 months ago, it was 5.8 at 60% loan to value
I
with no
remember.
cash out. The
I
last
remember.
2 months, we've been able to negotiate to get it from 5.8 up to 70% now with cash out. And this is the same sort of negotiations we did with the seasoning. Is it's always been 90 days for us for the last 2 years as the shortest, but now we've got a lot of clients that are really good at what they do, where they've got all their subs lined up day after closing. They'll go in, they'll do a full rehab in 30 days, and they shouldn't be penalized because they're better operators, quote unquote, than those that take 90 or 180 days. So now we could have somebody that buys a home, fixes it up, done in 30 days, refi, get them the cash out, and move on with their next project. And that's a big win for us because we have a lot of clients like that. The only different requirement is that mainly we need a 1.15 DSCR, not 1.0, but 1.15.
There you go. What else is going on in the world? DSCR loans, conventional, FHA, any of that stuff? Any other news of note that we should tell the audience?
I think a lot of clients obviously reach out and ask about the difference between conventional investment versus DSCR and non-QM investment. I always like to make it simple by saying, if you're looking for the cheapest loan possible, because we always have people calling like, what's the cheapest rate with the lowest cost? And, like that's going to be conventional, right?
Correct.
But on a conventional side, you also are starting to miss a few things. You're starting to miss the LLC aspect of being able to truly closing the LLC, which means you sign the note in the LLC. All you do is sign a personal guarantee for the LLC. Doesn't usually show up on your personal credits, totally separate. You also miss the aspect of qualifying with less documentation and obviously qualifying off of rents on DSCR or like bank statement income, or versus, you have to use tax returns and everything, right? So those are the biggest differences between conventional and non-QM. I tell clients again, conventional, if you want the cheapest loan possible, we can help you in conventional in 17 different states. If you want a different loan that's not conventional, this is where you need to look, right? But I think that biggest difference that people always look for the cheapest product. Cheapest isn't always the best, right? You just want to talk about the solution before jumping onto whatever is the cheapest, because it might save you, a couple grand now, right? Or an eighth of a percent now, but in the long term, based on your long-term goal, it may be better to have it as, a DSCR or non-conventional loan.
Couldn't agree more. Guys, at the end of the day, Convoy Home Loans is a big part of One Rental at a Time. They've helped hundreds of you move forward. If you just want to talk shop, talk mortgage, understand the difference, conventional DSCR, get some of this 5%-ish money, reach out to them. Go to convoyhomeloans.com. Click that little blue button that says more info or get started or whatever the heck it says, and tell them you came from ORaaT. And one of these two gentlemen will help you. If you don't do that, you don't say you came from ORaaT, you're going to get somebody else, and you don't want somebody else. Guys, you're amazing. Take care.
Thank you.
Thanks, Mike.